My name is Max Gagliardi, and you're listening to the Tock Energy Podcast. If you're watching this video, take a second, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app, leave a review, help me out. This episode's guest is Joe Burnett with Blockware Solutions. Joe and I met through Twitter when he was working on a research report called The Golden Age of Bitcoin Mining. I'll link the report in the show notes. This episode's filled with discussions about how we're currently in a very profitable time to be mining Bitcoin. We talk about the history of hash rate on the network and how we see it growing into the future. Lastly, we talk about the energy side of Bitcoin mining and how Bitcoin miners are like energy pirates out there trying to seek and destroy every bit of wasted energy they can find. Hope you enjoy the show. Joe, welcome to Tock Energy. Thanks for coming on.
Thanks, Max. Happy to be on.
Yeah, absolutely. You put out a cool report earlier. I think it was this week, the golden age of mining, and we had been messaging a little bit on Twitter, and I thought it'd be great to have you on. We could talk about that report. But before we launch into that, just history on, or just really the background on your company and what you guys do, and I think that'd be a great way to launch the conversation.
Yeah, for sure. So I work for Blockware Solutions as a mining analyst. And Blockware Solutions is basically a vertically integrated Bitcoin mining company. We do hardware, hosting, and pool. So basically, you can purchase new and used ASICs from us, for your own operation, or you can host ASICs with us if you don't want the hassle of setting up your own farm. And then obviously, you can also point your ASICs to our mining pool. So my role there is like I said, mining analyst. A lot of my responsibilities are just creating mining-related research just for the Bitcoin community in general. Also, we have the Blockware Intelligence newsletter, and I work on the mining section of that, and we send that out to about 60,000 investors pretty much every week. And on top of that, I guess I work on any sort of internal models and projects that I can help out on in the company.
That's awesome. So just a quick history on Blockware Solutions, just maybe like the abbreviated version. You have to go into all the details, but how long have you guys been around?
Yeah, so Blockware, so I'm actually very new to Blockware. I guess a little bit of my background first.
Sure.
I did graduate school studying analytics, and I did a short stint in technology consulting before joining Blockware. And I've been at Blockware probably for about a month now. And it started, I would imagine, I think around 2016, 2017, mainly just, helping people, procure ASICs for their operations in the U.S.
So is it like large scale primarily? You guys do retail stuff? I'm wondering how it compares to like a Compass Mining or, now even like Upstream. There's other companies that are kind of targeting more retail. Is it all the above, or is it primarily these larger scale mining operations?
Yeah, so I would say it's kind of a mix. It is somewhat similar to Compass, but we have a higher minimum order quantity. So it's mainly dealing with, people that actually have their own farms or are trying to get into hosting, but at more of a larger scale.
Yeah, for sure. That seems like there's a huge need, I guess, as someone who's in the energy space, more traditional energy, oil and gas. It seems like there is a bit of a black box around ASIC supply chain. We've really tried to focus on it for our company and what we do, and we're doing some small scale mining and looking at doing bigger mining, but just immediately recognize that this is a critical component. So I think that people being aware of the different options that's out there is a positive, because it can be a massive factor on your mining economics depending on what your cost of entry is.
Yeah, for sure. I know Mason, the CEO of Blockware Solutions, has told me the story many times when he was originally trying to procure ASICs just from Bitmain in China, and back in 2017, 2016, how difficult and kind of, scary it was originally to do it. And he immediately, recognized that, wow, if someone in the U.S. wants to buy, an S9 or whatever machine you're looking at, it's not as easy, as straightforward as buying is anything off Amazon. It's a lot more complicated than that. And so that's kind of the immediate need that Blockware sought to fill.
Right. Your background, particularly around how did you end up in the mining side of, I know you're new at Blockware, but just how has it gravitated for you in your career? It seems like there's a lot of different angles when you go to, for example, like Bitcoin conference in Miami, you meet a lot of different people across the space. I felt like the mining side I met maybe it's because I was around a lot of events where they were at, but I felt like I met quite a few people. But I was also just surprised like how broad what it means to be in Bitcoin is. But what was your journey to get to like this part of the industry?
Yeah, no, that's a great question. I actually haven't. I'm looking forward to doing it, but I have not been to any Bitcoin conferences yet, surprisingly. But no, I mean, I guess I kind of fell down the Bitcoin rabbit hole in like 2017, 2018 bear market is when I like really kind of hardened my like opinion on the idea. And I working in like technology consulting, I knew I wanted to break back into Bitcoin eventually. I just didn't know exactly what I wanted to do. And I guess kind of after the summer, I recognized, I was like, all right, I really need to make the jump because my passion is definitely in Bitcoin and maybe not in my current job. But
yeah,
I mean, definitely looked at a lot of companies that I was interested in working for, and obviously there are a lot of great Bitcoin companies out there. But I guess I kind of settled on Blockware for I guess a few reasons, but probably like the main reason was similar to like the report that I actually published. I kind of had this like thesis that I hadn't quite fleshed out like in a written form before, but I just kind of had this idea that Bitcoin mining was going to be a very profitable future for the next decade, I guess. And I kind of had that idea for like a few reasons. I hadn't like put really specific data or ideas behind it, but I just knew that like, hey, like this is going to be a great opportunity for not just like Bitcoin denominated investors, but even USD denominated investors, like traditional finance that may not understand Bitcoin, but if they see a company that's just growing really fast and spitting off like massive cash flows, I think that's just going to be extremely valuable and extremely hot industry, for the next decade.
Yeah, absolutely. It seems like the industry has evolved, and to me, someone who's about a year in the space, it seems like it's gone from this kind of upgrade. Well, before I go into that evolution, before I get into that, one thing I've noticed early on is that it seems like a lot of these companies are relatively new. I mean, your company's been around in the space for what I would consider a long time. I mean, if you take out like the traditional Chinese miners who've dominated this industry and have been there since the beginning, and you focus on like kind of North American miners, which is what I have been paying a lot of attention to. It just seems like this space is still so early in terms of this industry. Am I looking at it the right way? It seems like all these companies you look at, even some of the most experienced ones are only a handful of years old. So it's just a really exciting and interesting space to be in still.
No, you're exactly right. And I mean, just being in the space, I guess, over the last years, not full time, but just actively involved with the community, I kind of had a sense that like, hey, like it's early, like it's really early. But now after just being in the industry, I guess for a month now, it's really, you recognize like, wow, like so few people really get what Bitcoin actually is and probably will be. And it's just kind of like fascinating that we're going to be able to watch it unfold as we've kind of seen it unfold over just the last 4 years.
Yeah, for sure. So if you look at think about the history of the mining game, and you're talking about the golden age of mining coming up, there's been a market shift, right? You went from this kind of like a hardware game, basically, where you saw big increases, and now you're seeing it somewhat flattening out. And this will kind of lead into the report. But it seems like it's moving maybe from a hardware game into more of an OpEx or energy game. And so if you could just kind of start from the top around, you touch on like the history of hash rate in this report, and we'll link it in the description of the episode, but kind of start walking through the logic around how you got to the thesis and how you see it playing out.
Yeah, for sure. So I guess like the thesis of the report was two general ideas. So first was that, Bitcoin is like the future world reserve asset. And because of that, price will continue to exponentially grow. The second main thesis is basically that hash rate growth will continue to slow. So I'm not saying that hash rate is going to decline. I'm just saying that it won't be growing at the same rate, that it grew back in 2013, 2014, etc. And so generally, the price is going to continue to grow. The price of Bitcoin is going to continue to grow, basically just due to future mass adoption and increasing scarcity over time. And, price growth, I think now is kind of accelerating, like on a longer term scale. Mainly, or partially at least, due to mining firms becoming large enough to capitalize on cheap public market financing. And so as more and more of these large scale miners, can access these public equity and debt markets, they can, like you said, fund their operating expenses, which is kind of the name of the game now, and hold all of the coins they mine. And so that's not just like a general thesis that was kind of a general thesis that I had, going into Blockware, but we could use some Glassnode data to basically like verify that's happening, and actually coins that miners are mining are not hitting exchanges at the same rate that they once were. And so
go ahead.
And so basically, in addition, to public miners, you have companies like MicroStrategy who are adopting Bitcoin as their treasury reserve asset, and they're kind of like synthetic Bitcoin miners, borrowing money at very cheap interest rates to purchase Bitcoin. But going back, I guess, to the original first thesis about hash rate growth slowing, we kind of came to the conclusion that this is happening for two key reasons. First would be ASIC commoditization, and then two, and I would like to hear your thoughts on this specific one because I'm not necessarily the expert in this, but two would be a lack of scalable, like, cheap energy. So I guess first of all, going to ASIC commoditization, the idea is that like new machines now are no longer 100x more efficient within a couple of years. So ASICs obviously have become increasingly more efficient on a joules per terahash basis, but that marginal growth is slowing over time. And so the idea here is that new ASICs today, like the S19 Pro, have the potential to last for maybe even like 7, 8, 9, 10 years. And basically, if the price of Bitcoin continues to exponentially grow and ASICs continue to commoditize, then it will become clear, over the next 8 years that the major bottleneck to hash rate growth is simply finding that accessible, scalable, and obviously cheap energy, because that's the name of the game. And so I guess kind of summing up the main part is, the issue with energy production being, or cheap energy production being a bottleneck, is that you can't spin up a large nuclear power unit overnight. Like those facilities take minimum of multiple years to plan and fully build out. And so like this lack of cheap energy combined with ASIC commoditization is basically setting up kind of an environment for miners to perform well if they have access to that scalable, cheap energy.
Yeah, for sure. Well, I mean, I think the first part of this is and what we noticed when we started looking at how do you model hash rate and how do you think about historical hash rate growth, or really we like to look at things as like hash price. So basically the entire, the sum of the rewards that are being paid out divided by the amount of hash on the network. And so kind of what the hash price is, we look at historical and, how do you think about it? And you think about the next gen, we're not going to see this 100x leap or even 10x leap probably. We're seeing a smaller leap forward in terms of terahash per unit, smaller leap forward in terms of efficiencies. And so, part of me is like, all right, well, it will slow because of that. And that's logical. The other part of me is like, well, then, but won't the foundries maybe just crank out more units and then you'll just have more ASICs because, they may not be as worried about, hey, these are going to go obsolete. Like they in the past, it was like, how many these are we going to make? We're going to make so many because we know that then there'll be this new model that'll go obsolete. And I don't really have the knowledge around that. This is just me thinking through it. Mm-hmm. And so maybe they just flood the market with more of the existing hash rate models, but then now you got to find energy to power those. I'm just wondering how the foundries will play into this and like the supply chain of ASICs and just, you see a lot of people trying to plug these things in, and we'll get to the energy side of it in a minute. But I also just wonder like how feasible is it for these guys to continue to crank out the amount that they're cranking out? I don't know if you have any insight at all around just the amount of supply of new ASICs coming on, outside of the fact that they may be getting less powerful.
Yeah, no, that's a great point. And I think like the one thing that you got to really keep in mind is even if they do ramp up the production, say they ramp up the production this year, and I honestly I don't have much insight into exactly what firms like Bitmain can do as far as scaling their manufacturing operations. But even if you ramp up production this year, that hash rate may find, outlets to get plugged into at some point around the world. And then you just have that base of hash rate that's now, on the Bitcoin network. The next batch of ASICs coming out is still going to be small relative to how much ASIC and how much hash power we already have out, because like the new batch of ASICs, like we said, is commoditized, and it's not going to be much better than the previous batch of ASICs. And like you said, like if it's going to be hard possibly to find places to plug them in at potentially, at least at the energy costs that many miners are going to be looking to find or to be competitive.
Yeah. Well, I mean, as it's getting out of China, so this is another point that, you've seen hash rate migrate out of China. You've seen there's still estimates showing maybe 20% or more is still located in China. It's just probably gone underground or using a VPN or whatever. We can't exactly tell who's left there, but you're seeing this huge migration to North America and specifically the U.S. And you've got kind of these big public companies that are out there doing it. There's also some large privates, and you mentioned some of them in the report, which again we'll link. But who are some of the major players that are here in the U.S. that are driving, in the space, and we can, at least with those guys, we can track kind of what they're doing because a lot of them are public.
Yeah, for sure. So like the main public miners are, Riot, Mara, Hut, Bitfarms, and, they're projected to, we actually published another report back at the end of November on this, and it was basically how, public miners, how they have basically publicly released their ASIC orders and how much hash power that's going to bring on the network, which is pretty interesting. And so I think back at the end of November, we noted that they had about 14.6 exahash just currently on the Bitcoin network. And if you just looked at their public ASIC orders that are coming in, they were going to add another 56.5 exahash to the network, which I think at the time of writing, it was about like 33% of the total current hash rate. So that's pretty massive. They're definitely bringing on, a lot of hash power, a lot of hashes. But and like we said in the original report, these people that are bringing on this incoming hash rate, they're not going to be selling Bitcoin, and so it's going to be interesting to see how the market reacts to less sell pressure hitting the network as well.
Yeah, they're not selling it. It's really, as I think about capital markets around Bitcoin mining, one thing we've noticed as a private Bitcoin miner is that it is difficult to find good sources of capital comparable to how it would be in traditional energy infrastructure. So, for example, oil and gas, or for like our company had raised money in the midstream or pipeline space. And there was large-scale groups that did this in the private equity world that had raised billions of dollars to put to work. They would, if you were a team or a talented team or company, you could go and find the capital and relatively easily procure capital that you need to go do this operation. With Bitcoin mining, you don't see those large-scale private equity groups like you do in traditional energy or infrastructure assets, and so that makes it a challenge to access capital. And then maybe if it's private money, friends and family, or private family office money, you could probably raise a little bit here or there to put some small scale projects together, but you're just kind of lacking the sources of capital. And where you really see a lot of the capital coming from, at least it appears to me, is through the public markets. And so my thesis on this, I don't think this is like controversial, is that like really the public markets want to own Bitcoin, or these institutions want to own Bitcoin. They can't. That's why groups like MicroStrategy are buying so much and holding it, because they know that allows investors that are allowed to buy stocks or equities, the exposure they can get to Bitcoin. And so you're seeing it with these public miners. They're buying and holding, and that's a way for the public people that may not otherwise be able to get access to Bitcoin can get that exposure. And so they're actually being rewarded for hodling the Bitcoin through their share price. And I think as long as that phenomenon continues to happen, you're going to see a lot of this new supply coming on that's not moving, right? I mean, at least am I thinking about that right?
Yeah, no, I think you're exactly right. And I definitely think the trend towards more mining companies going public will probably continue to accelerate, like you said, because public markets are putting a premium on these Bitcoin related companies. And one thing that's to me is so fascinating about Bitcoin mining is, like I said at the beginning, like one of the reasons why I wanted to just hop on the industry is that, like, modern day technology companies are growing really fast, but losing lots of money. Bitcoin mining companies are growing really fast and making lots of money. And I think that's just like a fascinating dynamic that I think a lot of people really like haven't like captured like the implications of what that might be. Like I said, Bitcoin investors, like Bitcoin denominated investors, people that have like really taken the orange pill and are hardcore Bitcoin, they want to turn 100 Bitcoin into 110 Bitcoin. They don't care about turning $100 million into $110 million. But USD denominated investors, like all of Wall Street, they want to get some USD denominated alpha. And Bitcoin mining is honestly a fantastic way to generate both Bitcoin denominated alpha, but also USD denominated alpha. And I think as more and more people and traditional investors recognize that, they're going to start hopping on the Bitcoin train. And I would even think that, as time goes on and Bitcoin just, doesn't die, doesn't just go away, you'll probably eventually start to see like these private equity companies be willing to actually, do this somewhat similar to what they're doing for, like you said, the oil and gas companies that you've worked with, and do that for Bitcoin mining, as long as they start to feel more comfortable with it, and as time has gone on and it just hasn't died. I think it's just going to be more and more prevalent and obvious that, like, hey, like, this is a real business, like, this is a real asset, this is going to stick around, and there's a lot of alpha here while other people are scared to do it.
Yeah, and my big thing is that I'm trying to take some of the warnings some of the negative things I saw in the energy space that happened, and I've talked about this before on some spaces that we recorded and some of the things I put out there. But my fear is that if access to capital gets too easy for Bitcoin mining, you'll see, people doing silly things, right? Like if you can have unfettered access to capital, you can go and you can get expensive energy, right? And you're in your head, you're like, well, it doesn't matter because I've got this capital, I got to spend it, or I've got this access to debt, I got to spend it, which could drive hash rate growth into energy sources that maybe are higher cost energy, and therefore could cause hash rate to keep increasing, even if price for some periods of time doesn't keep up. And so that could cause there to be like kind of these long and prolonged bear market potentially in mining, which worries me because when guys start getting access to unfettered cheap capital, then they can produce at a loss because they say, what, we'll sell some more equity or raise some more money, and they can keep kicking the can without actually generating profits. And I saw that happen in U.S. shale with natural gas, and so that is one thing I worry about. I don't think there's enough. I think there may be some other constraints, like for example the ASICs, like we talked about. Maybe guys with the expensive energy will have less access to capital because they can show that their numbers aren't as good. But that is one thing I fear around the next kind of 5 to 10 years, is that maybe the space gets flooded with people that just have the money, and so they just go do it, whether or not their mining ventures as profitable as it otherwise could be. Is that something you've ever thought about, or am I misguided in thinking about it that way?
No, I think that's actually a great point. I think like that's kind of like one of the major problems with like just the financial system in general today. We have this low cost of capital where people can pursue projects that may only work when the real interest rate is literally negative. And so,
right.
so when the real interest rate's negative and you're pursuing a project that's marginally better than that real rate, you actually could probably be destroying capital for the economy, but being profitable at it. So I definitely think that like we're in like a weird situation where there are really bad projects that are incentivized to be built, and if there comes a day of reckoning when rates get raised just in the market in general, and the Fed and I guess the central governments of the world slow down on the money printing, at least temporarily, like that, there could be a day of reckoning when there's minor capitulation like we've seen just March 2020 and just during the halving and back in 2018 as well. So I mean, if you're building out operations that are just kind of taking advantage of the times of easy money and not like I guess your business maximizing the potential to I guess operate at the lowest OPEX cost that you can possibly find, then yeah, like you're positioning yourself for the good times, but not necessarily for the bad times. And the bad times, unfortunately, probably will come. It's just a matter of time.
Yeah. I've seen a few stories of guys out there doing that. I know of some guys that are kind of going full send in the mining space and really not have competitive energy costs. And I think that this, we'll talk about this later in the report that came out, which is how critical energy costs are, and how, like, over time, today it might not seem like that big of a deal because it's a bull market, but just over time, maybe mention the importance of why that OPEX is so critical for these operations.
Yeah, no, it's definitely important because, if the price of Bitcoin is not at super high levels like it could be in the future and somewhat is now, you're just not going to be able to fund your operating expenses. I mean, as I think I tweeted something today that said, like, if you're running an S19 Pro, you're at 7 cents per kilowatt hour. Your break-even Bitcoin price is about like $9,000. So that at that rate, you kind of have some time to and you kind of have some leeway to I guess be profitable for a long time as long as Bitcoin doesn't crash. But still, at some point, like you're going to be cutting it close to where if your operating expenses are just too high and more hash rate starts joining the network, especially at rates like 5 cents per kilowatt hour, 4 cents, then you're just going to be cut out of the market and you're going to be either operating at a loss or just forced to shut down your machines in general.
Yeah, so you mentioned in the report the access to cheap energy as being something that is a huge advantage for certain guys, and this is what I wonder around how much is left, right? So how much is left of cheap energy? I think the biggest thing that I have underestimated early on was just the amount of waste on the grid. I just kept thinking, there's all this capital stack in between the energy producers and the grid. You've got guys have to drill it or drill for oil and gas, or they have to mine for coal, or they have to build these renewables projects or nuclear facilities that hardly are getting permitted anymore. And then they've got to get it through this massive capital stack, billions and billions, tens of billions of dollars to get it to the grid. And so in my head, I'm thinking, okay, well, it should just be easy to cut all that out and go directly to the sources of energy and generate there. I think the key that I underestimated was just how wasteful and inefficient the grid really is. And so I think what we're seeing now, we're in this era of miners going out and exploiting those inefficiencies, and there's a lot more of it than I thought there would be. I mean, there are gigawatts of inefficiencies, but it's happening rapidly. I mean, Bitcoin miners are incredibly, they're like energy pirates is what, I've heard them being called, and they're really good at this, right? And so they're finding this stuff up and they're getting it under contract, this excess energy. And so I think there's a big question mark around how long can that continue for, to where you kind of you've captured that marginal cheap kilowatt hour, right? And that's a big question mark for this.
Yeah, for sure. I guess I would be curious to know, and you may not know the answer to this, like what percentage of like that wasted energy that you thought was there, or that you now know is there, like is being like tapped into right now, or do you have any idea?
I think it would be really difficult to tell. I think that in areas like Texas, it is getting hyper competitive for Bitcoin mining. Mm-hmm. And Texas has some unique situations like around ERCOT and the way that their energy markets are structured, and the ability to do demand response and some other things that can help drive your cost down through monetizing energy in ways that in other areas you can't do on the grid. Like I live in Oklahoma, so just north, and you don't have the ability you can't sell power back to the grid, for example. You can do netting, which isn't nearly as powerful. And so I know in some of these areas, like it is getting hyper competitive in West Texas around finding these sources. I think there'll be new sources of power that are generated with Bitcoin as the anchor tenant. I think you'll see power plants and things that get built where you have Bitcoin miners, at least part of the base level of demand that's underpinning that new generation. But those projects take a long time to get done. And so in the areas where everybody has been focusing, Texas being the prime example, I think it's getting harder to find not only the excess energy, but also the facilities to build around, right? So you don't mention it a ton in the report, but another interesting aspect is not just finding the power or the raw energy, it's the building out the data centers. And there's just so much infrastructure and the transformers and everything else. I mean, I think if anybody's gone to see like Riot's social media stuff that they've done around the Windstone facility, it's not just the energy. It's all the transformers, it's the buildings, it's the all these different things you have to put together. And so in terms of like the intersection between where there's really good surface use areas where you can build data centers and where there's that cheap energy, I think it's getting more rare. And now I'm hearing about a lot more of these other Midwest states that are getting targeted for Bitcoin mining. But with the amount of appetite for the energy, I can just see it getting harder and harder to find stuff on grid. And then with the political nature of being on the grid too, I think there's some other risks that people may not be glossing over a little bit.
Yeah, no, you're definitely right. I mean, obviously the U.S. is probably one of like the relatively safest, like just in general, like the political risk. But yeah, I mean, like places like Kazakhstan and obviously like China, those guys didn't make it out. But yeah, I mean, one thing that I've also I've been thinking about recently is I'm definitely like a big fan of using that, like your idea of the wasted energy that is either like on the grid or off the grid. And would you say it's like very difficult to scale those types of operations? Like for example, Riot's building their 300 or whatever, almost 1 gig or 500 megawatt facility or whatever it is, something massive. Is there like not necessarily like an ability to do that for those sort of wasted energy resources that you were talking about?
So there's an argument here. I think like the obvious easy answer is that larger facilities on grid in theory should have the ability to scale and have economies of scale more so than your small off-grid deployments. And at face value, this is true in a lot of ways. The power generation cost to do a 50 kilowatt generator, which is a small amount, for Bitcoin, relatively small amount of power for Bitcoin mining. It's a lot less efficient than using a larger scale, 350 kilowatt generator. So even at that like tiny scale, those are still small scale. So from 50 to 350, you gain efficiencies and you gain economies. Now getting onto the grid, you're gaining even more because you can build these big facilities, but you're also losing some too. I mean, I think this gets into in terms of like just the overall cost. This is a massive operation. So this gets into a really interesting point that I have wanted to dive deeper into with Bitcoin miners, and it's around this point of energy costs and what all they're including in that. And so, for example, you can say, I'm pulling energy off the grid. It's really efficient. Look how cheap this is. But at the same time, I can look at that facility and see that you have, hundreds of employees. There's all this, costs going on to putting in the infrastructure, the capital, building out the data centers. And look, I mean, locating all of these ASICs in one building is an engineering challenge. I mean, that's a lot of heat. It's a lot of power in there. And so I still think probably larger scale is more efficient, but there's unique challenges to being at that scale. And so this isn't like the click your fingers, snap your fingers and we get one of these Windstone facilities up and going kind of overnight. I mean, these things take time and there's a lot of costs in there that may not roll through in your cents per kilowatt hour or dollars per megawatt hour, but they're in there in terms of people have to undertake those costs to get these things done. So it's more challenging than people think. You look at like a PPA, a power purchase agreement, and you say, all right, well, look, I can access 100 megawatts here, and this is a good price. And then you start to figure out, now I got to go build a huge structure. I've got to put in a bunch of transformers. I've got to figure out a way to set this up long term. And by the way, I may not even own this site. I may just have it leased, which a lot of times you have to lease a site. You can't even buy it outright, or you maybe only have a short-term PPA that goes from 3 or 5 years, right? So you're making all these investments, doing all these things just to get yourself teed up to go. And it may take you 12 or 18 months before you can even launch that mining venture. That's an eternity in the Bitcoin space. So, people gloss over it, but there are challenges to being on grid at scale, no doubt.
Yeah, no, 100%. I mean, like what you were talking about, I think we talked about this before. I think Riot says that they, operate at 2.5 cents per kilowatt hour. And, there's just so many more costs that play into operating a large-scale facility instead of just the electricity itself. So, yeah, I think that's a great point. But that's the one thing, like, I know the guys at Giga Energy, if you've talked to them, but, like, they,
great guys.
Yeah, they're awesome. I guess similar strategy to you, being like the cockroaches of Bitcoin mining, like chasing after that stranded cheap electricity or cheap energy. And I think that's just honestly like long term such a fantastic a vision for a company that's probably will outperform Bitcoin itself, which is awesome.
Well, it's like it's smaller scale and therefore less attractive to a lot of people because they're like, well, you're not deploying hundreds of megawatts. And it's like, but it's meaningful. I mean, still like, a 50 kilowatt deployment could cost you 200 grand, depending on how much you pay for your ASICs. So that's a small relative deployment to what you'd see on grid, but it's a big capital dollars. And so if you can go out and you can go find like, a megawatt here, a megawatt there of really cheap wasted energy, it doesn't sound like a lot, but it's still millions of dollars that some investors can look at as a very attractive opportunity to go put money to work at. And then as a Bitcoin miner, it's attractive because it's mobile, it's flexible, it's nimble. We can spool it up like really quick. So that's the thing about being off grid. And like Giga's done a great job. Those guys have, they're doing everything kind of soup to nuts. They have their own manufacturing facilities for the data centers. They're even dipping their toes into the power gen world. And so if they find a wasted energy site, a wasted flared gas or wasted natural gas site, it could take them a week to get a contract signed. And then within the span of weeks, they could have a deployment spooled up versus these on grid. And you could do that kind of rinse repeat a number of times. And I've seen groups off grid, like the Great American Mining guys have had success over the last year spooling up what I would consider a material amount of power off grid. And it's a grind. You got to be out there turning rocks over and figuring it out. It's a skill set that's hard to have that skill set, but guys that can focus on that, I think will find success. It's just a matter of, it's a little bit higher touch, more work involved to find the opportunities. But once you get them and you can secure that long-term cheap energy, you position yourself really nicely, I think, over time.
Yeah, for sure. I mean, that was actually kind of a part of the report that I forgot to mention, that these small scale mining firms, that may not be tapping into like super scalable energy, but they're able to access 2 cents per kilowatt hour, sub 2 cents per kilowatt hour, just like you and Giga Energy. And those guys, like when I was talking to Matt there at Giga, he was like, yeah, we don't have to sell much Bitcoin. Like we can mine all of this Bitcoin and just keep it. And obviously they're adding just if they plug in an S19 and Riot plugs in an S19, they're both doing the same amount of hash power. Just obviously they have a lot less S19s or S9s. I guess he told me that they like to run. But yeah, no, it's I think small firms like that are going to do like great things for Bitcoin because there's a lot of alpha in that, and they don't have to sell much Bitcoin.
Yeah, for sure. It's interesting. I think that there's going to be more in the U.S. And so how do you guys view the future? Is it as simple as the U.S. is going to start dominating, or are you going to see other countries picking up as well? But I mean, outside, looking in, I don't see a lot of the macro research and things, and I'm not paying attention to a lot of, I just read the headlines of where the hash rate's migrating, but it seems like the U.S. is pretty poised to play a major role.
Yeah, no, I will probably end up publishing a report on this topic at some point. But no, I generally tend to agree, especially with the idea of like we talked about with public markets. I mean, U.S. has the most robust capital markets in the entire world, obviously, and so these firms like Riot and Mara, they're not gonna take a risk and go build some plants in Venezuela or Kazakhstan. Like they're mainly just gonna stick with the U.S. And like you said, like when you can borrow at cheap interest rates and the price of Bitcoin or the hash price is 25 cents and the price of Bitcoin is 50,000, 45,000, that it's just going to be, there's a lot of opportunities, I guess, and the price of power matters. But at this point, if there's demand and they can borrow the money, that there's probably going to just keep building plants, possibly higher electricity rates. So yeah, I definitely think the U.S. is going to be the main place. I don't know if the U.S. will obtain 50% of the hash rate. It'd be interesting to see what happens regarding that. I think we're at maybe 30 something percent, maybe 35. but obviously growing really fast after the China exodus. But then again, it's hard to tell. Like we had that CNBC article come out that showed that maybe 20% of the Bitcoin's network hash rate is still in China. So maybe I think Cambridge is the one that's been publishing and doing all that research, trying to identify where hash rate is actually physically located. But it's kind of hard to tell for sure, and we're kind of obviously continuing to learn that.
Yeah, for sure. Some of these states, it's interesting. I don't know. Where are you guys based out of? Are you based out of the U.S. or is it international? Or is everybody all over the place?
Yeah, it's Blockware is pretty much a remote first company. We have sites, in different places, but being on the research side, I'm remote. Most people I work with are remote. But yeah,
that's kind of what I figured. And so what's interesting to me is a lot of companies are remote now, but clearly the mining space has to be at a physical site. And what you're going to see, it seems like, is some of these states that are really embracing it, and other states that are like New York. There was already some legislation, floated to stop Bitcoin mining in its tracks. But it seems like this is going to be something that gravitates almost naturally towards places with freedom, because those are the places that are going to make incentives for miners to be there. And so I'm hopeful that the network will be upheld and more robust in the U.S. because you do have some places that care deeply about, being pro-business and being pro-freedom. And I think that those places will attract miners, is hopefully where I think the trends are showing that now, but I hope that continues.
Yeah, no, absolutely. I mean, I didn't Texas say they wanted like 50% of the hash rate of the whole network? I thought that was pretty funny or something.
They've been coming out strong.
Yeah, I mean, obviously, I don't want them to have any more than that, but I would be, happy to let Texas have a lot of the Bitcoin hash rate. And it sounds like, Texas, Wyoming, Kentucky, like their states are doing like, competing for obviously this demand. And I think it's gonna be fascinating to see what happens. And I think the U.S. is obviously like in a great place.
What do you think about for the people that are, a lot of the people that our company works with? Our niche is really oil and gas producers. Is so we've got a digital services side of the business where we're helping consult for groups that want to do their own mining, and we have also got our own mines ourselves. And so we're trying to use the digital services revenue to offset having to hopefully not have to sell much, if any, Bitcoin on the mining side. And that's kind of our strategy. But the biggest questions that we get from a lot of the people we talk to are more just kind of Bitcoin one-on-one questions. And I think a big piece to your report that's underpinning all this is this idea that the price will continue to appreciate. What are maybe speak to some of the macro trends we've seen lately, and why we should all be relatively bullish on Bitcoin price outstripping the hash rate in terms of growing faster than the hash rate?
Yeah, so I mean, like we're in like a super, I guess, interesting time when it comes to, I guess, central bank policy around the world and just government policy around the world. That we have like, basically fully embraced MMT. You see inflation running hot. You see, a Fed that's, threatens to potentially, hike rates next year. But, in my opinion, a lot of people I follow this opinion, probably like they're going to wane off of that right when the stock market or the equity market, begins falling, like 10% or something like that. But yeah, and I mean, I think Bitcoin is, the best money, and it's like real adoption of Bitcoin is just so small. Like we were talking about at the beginning, like so few people really understand or even think they understand what it is. And I think once you like really grasp that like Bitcoin is like, near perfect monetary properties, the mutable constant of 21 million coins. I mean, few people really, have grasped that and have taken a financial position, pursuing like what that actually really means. And I think as more and more people do that, and more people learn, and as some people in the Bitcoin community call Bitcoin, like they call it number go up technology. You may not know how it works, but it is really number go up technology. And as more and more people learn that, as time goes on, just the adoption will continue to grow.
I mean, I don't know a lot about this, and someone hit me up about this on another episode that was a non-Bitcoin related episode, and they talked about stable coins' role in the price of Bitcoin, and they weren't all that educated on this, but this is like, for example, to take a step back, I've had people ask me about oil and gas, and they say, hey, we hear these things where they say it's just subsidies propping this industry up. And I'm like, that's not correct. And I can explain to them kind of why that's incorrect. But I've heard people make the argument around Tether and around these stable coins that this is the only thing propping up the price of Bitcoin. I haven't really looked into stable coins that much. I know I've read some articles on it, but is there any, like, just your thoughts around that FUD?
Yeah, no, that's a great question. I mean, a lot of people, they call them the Tether truthers, trying to reveal. Right. And to be honest, I don't have much background on exactly what like Tether's like internal operations are, or how they're raising the billions of dollars that they've raised. So I can't speak to that specifically. But I do know that during the 2017 bull market, people were basically claiming that, hey, Bitcoin is only pumping because this company called Tether is creating these Tether coins, and it's basically just creating fake dollars and buying these Bitcoins. And, it's kind of hard to verify that because they haven't gotten like a true, Big Four type audit. They do have some sort of auditor, but it's a smaller company. But the one thing that I've noticed that during 2017, I think the market cap of Tether went to about, $2 billion, which, back then felt like a lot of money. But now compared to the market cap of Tether today and USDC, which is another stablecoin that's like based in the U.S., built by Circle, which is a very, in my opinion, like a much more reputable company that obviously is not holding, most likely is not a massive Ponzi scheme.
Right.
They have been this year. I think the market cap of USDC is like 30 billion, and so those are much more clearly and more trustworthy dollars are actually coming into the market. And you also have people like Saylor. I mean, Saylor bought $4 billion worth of Bitcoin. So it's not like people are not actually putting real capital into Bitcoin. Like this is like a real thing. And even if Tether may have done shady things in the past, it's not like the thesis of Bitcoin being the best money in the world, being portable, scarce, durable, secure, decentralized, like that. Those fundamentals of what Bitcoin is still holds, regardless of whether an outside centralized entity is doing anything to Bitcoin.
Yeah, no, 100%. That was kind of my response to this person when they made the point. And they had, to be fair, they hadn't done all the research either. They just were kind of saying, hey, here's something that worries me about it. Pivoting a little bit, for those people here that are interested in home mining, what would be your suggestion to them in terms of whether it's a good idea, if now is a good time to start getting into home mining?
Yeah, no, that's a great question. I mean, I think if you have a very high preference on obtaining like non-KYC coins, meaning like coins that are, you don't have to register on Coinbase to put your name, your social security number on it. I think like home mining is like a pretty cool solution. And also it's kind of good if you want to just learn more, about mining in general. Maybe like set up your own mining farm, or maybe you have like solar panels on top of your house that you're using, but you're selling power back to the grid, and you're not really completely using. You could be utilizing more, or you have like a big subsidy to put solar panels on your house or something like that. I think if you can achieve that lower electricity rate, then yeah, like home mining is an interesting thing. Or if you want the non-KYC coins, as far as like I guess doing it to stack more Bitcoin, it's probably going to be, and you have like a normal relatively high retail electricity rate, I wouldn't go into it thinking you're going to turn one Bitcoin into two Bitcoins. But yeah, I mean, you're definitely probably, at least as of now, you're probably going to be making positive cash flow from it, USD denominated. It's a question of whether you'll get the original Bitcoin you put in to purchase those mining rigs at using them or running them at such a high electricity cost if you're just using your retail electricity rate.
Yeah, for sure. That's the question. It's a good time to try it if you're wanting to try it, just because of where the hash price is at. You can it's possible to be profitable right now. But to your point, there's a lot of risks and there's a lot of things you have to consider. And And I did like a little home mining guide on the channel. There's others out there that are really good if you're thinking about doing it. Last set of questions here. What you've done this piece of content, what are some of the other wish list pieces of content, like reports and things that you would love to put out, or things that you're working on that you see yourself doing here over the next coming into this next year?
Yeah, for sure. So I guess just for Blockware intelligence in general, we're likely going to be publishing an annual report just looking back on what happened in the year, just in on-chain analytics, like Will Clemente, if you're familiar with him, the young whiz kid, many people call him, and just equities in general, and then I'll be writing the mining portion of that piece. But as far as other like mining related research, I've got one idea of I think there are, companies like Atomic Finance, I'm not sure if you're familiar with them, or companies like Sovereign that are kind of doing this idea of DeFi on Bitcoin, decentralized finance on Bitcoin.
Right.
Just writing a basic report that shows, if DeFi on Bitcoin, becomes something like what we see on like Ethereum or Solana, what's going to happen to transaction fees on the Bitcoin network because of that. And, obviously that industry, just DeFi on Bitcoin is very small, but growing rapidly, I would say. And it would be interesting to see, how much miners are going to be able to generate from those increased transaction fees. And obviously, eventually the block subsidy is going to run out. It may not be for, 100 years, I guess, or 120 something years. But yeah, in 10 years, it's going to be dwindling down to a small amount, and transaction fees are going to be the way miners, actually, generate cash flow. And so it's going to be interesting to see if doing some analysis on that, what will happen to transaction fees. But yeah, that's one report that I want to do. Another would just be trying to identify, I guess, what public miners are trading at, and what basically like the equivalent of what you're paying per ASIC. So like you could, with Riot, they're trading at massive multiples. You could be paying, like $50,000 per S19 that they currently have operating. So it's possible that if you want exposure to Bitcoin mining, maybe public equities is not the best, most efficient route for just your normal retail investor.
Yeah, I think some of that price is like, it's like anything else. They're kind of forecasting the future. There's some future value multiple put on it, although it does seem very, very highly valued versus what they create. It's almost shocking. I think I was looking at one of the public miners, and I looked at like their Q1 and Q2, and I was seeing how much Bitcoin they actually made, and then looking at that relative to their stock price, and I was like, that is crazy. But I think part of it's like that future prediction or that future value. One thing I would really like to see some content done around, and I don't know hardly anything about this, but I would love to understand who is out there working on mining kind of risk mitigation in the financial space. For example, like hash rate derivatives or things where you could hedge your hash rate and be able to give miners a better way to manage the risk of the business. It's just something that investors ask us a lot, which is what are the products available to us to hedge the risks in this business. And I think that there are some available, obviously, for Bitcoin, but to the extent that there could be a more mature marketplace and liquidity around, or even just products themselves around hedging hash rate or locking in future hash rate, I think that would just be massive for the industry. I just don't know if you've looked at that at all, or that would be something, if I had to give you my wish list of what you should research, I would love to read it.
Yeah, no, that's actually a great idea, and I actually just wrote that down as you were talking, because I think that being able to have investors speculate on hash rate is interesting. But yeah, from a miner's perspective, it would be great to be able to hedge out that risk. You could hedge out hash rate risk, and then you could also hedge out Bitcoin price risk just with puts in general. And I'm sure like if you did that, the way the market would probably be trading is you could probably, for USD denominated investors, you could basically hedge out a lot of the risk that the market might give you over the next couple of years and still earn probably a pretty decent dollar denominated return. So yeah, that's a great idea. I'll probably do something like that.
It'd be interesting to read about, and I've heard like rumblings of things that are in the works. But that's kind of all the questions I had for you. What else? Anything else? I know you mentioned kind of before we started talking anything on the energy side. Maybe I already covered it, but I've really enjoyed the convo so far. If there's anything else you wanted to hit me up on that front, we can do it here. We can do it offline later, but that's the main stuff I had.
Yeah, no, that was great conversation. I think you covered like my main energy questions, and I know I've been blowing up your DM somewhat to get you to answer a few of my energy questions. But yeah, no, I think it was a good conversation and enjoyed it.
Yeah, I did too. Well, hopefully we can collab on something again in the future. And thanks again for coming on. And really, you're doing great work with that report. And looking forward to seeing the new ones you put out.
Awesome. Yeah, thanks, Max. Appreciate it. And thanks for inviting me on.
Thanks, Joe. See you.